This morning in Higher Learning, with more and more students borrowing money to finance their college education, including myself, many people are turning to private loans to cover the costs. But those loans can often be more costly than the loans offered by the federal government and don't offer terms such as loan forgiveness in the event of a death or disability. But some private lenders are starting to move in that direction, and here to talk about it with us today is Peter Kerwin from the Rhode Island Higher Education Assistance Authority. Good morning, Peter.
Good morning, Michaela.
So tell us a little bit about what was happening with these private loans before.
Yeah, I mean, in most instances, financial aid advisors and college financial aid officers are telling students to max out on their federal loans. And that's because the federal loans have a lot more generous terms for consumers than private loans often do. And one of the areas where there's a real problem is with death and disability provisions. In federal loans, there are forgiveness provisions. If a student dies or is somehow incapacitated, those loans are forgiven. But with private loans, that usually isn't the case. What happens is the co-signer, who's usually a parent, then is responsible for paying off the rest of the loan. And what's happened is that Wells Fargo last month decided that they're going to offer loan forgiveness. They're one of the key players in the private loan industry. So for them to make that move, it's a kind of a big deal. Now, they're swearing up and down it's not in response to this, but there's actually a federal piece of legislation called the Christopher Breisky Student Loan Protection Act. It's named after a young student who passed away in 2006. He was a student at Rutgers University, and his parents are still paying off $44,000 in college loans that he had. So this bill got introduced in the House. It was passed the House this fall. It's now before the Senate. So I think they were kind of feeling the pressure and decided, let's introduce that provision for our loans.
Absolutely, and more lenders are going in that direction. Right. So what you're saying here is, don't settle. Shop around and make sure you know your options.
Exactly.
Right?
It's with anything, like with anything else, you want to know the different choices. I mean, Sallie Mae is another one of the big private lenders. They've offered forgiveness for quite a while. So a number of lenders are still looking at it like, well, you're a co-signer for a reason. We have co-signers because if anything happens, then you're responsible for paying off the loan. So they're not moving in that direction, but some are. So the point is to check it out, look around, make sure you know what you're getting into. And remember, those private loans don't have some of the beneficial provisions that federal loans often have. The repayment rates that don't change, and income-based repayment plans that federal loans have that cap your monthly payments based on your salary. So, I mean, that's a great deal for students. So max out on those federal loans and then shop around when it comes time to look for a private loan.
Great advice. Thank you so much, Peter. And for more information from College Bound Funds, head to foxprovidence.com.